Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are buzzing away in trade. And on the technicals, we are now joined by Shivangi Sarda, who's the analyst, equity derivatives and technicals, broking and distribution, Motilal Oswal Financial Services, joining us. And of course, Ria is here with us from our research team. So let's get started. Ria, defense stocks, defense names is what you picked out for us. Tell us, why is Bharat Forge, Mazagon Docks, Cochin Shipyard, all of them in focus today?
Yes, well, so all of these defense stocks are in focus today. The likes of L&T, Bharat Forge, Mazagon, Cochin Shipyard and even GRSE. Most of these stocks are trading with gains of 3 to 8%. Now, the Defence Acquisition Council meeting is likely to happen today to consider an approval for projects worth more than rupees 1 lakh crores. Now, this involves the acquisition of 7 new warships under Project 17 Bravo for a tender worth rupees 70,000 crores. And this project is expected to be split between 2 shipyards. And this is positive for shipyards like Mazagon Dock, Cochin Shipyard, Garden Reach and L&T as well. Now, during the meeting, they are also going to discuss a proposal to replace the Russian origin T-72 tanks with indigenous future-ready combat vehicles or FRCVs, and the army plans to procure 1,700 FRCVs with over 60% indigenous content. Now, this project is expected to be worth over rupees 50,000 crores and is expected to be completed in phases, with 600 tanks being built in each phase. Now, companies like L&T and Bharat Forge are expected to participate in the tender, so we are watching out for all of these stocks today.
Well, certainly all these defense counters define the market move today, but let's talk about SBI Card. And Shivangi, coming to you for this one. A very good afternoon to you first of all, but specifically the first stock that you have picked up, that is SBI Card. From those 700 odd levels, there's been no stopping one-way run-up, that's what we have seen. But Shivangi, tell us, how much more upside do you foresee in this particular stock after the run-up?
Absolutely. Thank you so much for having me. Shrishti, we've seen that SBI Card has been one stock which has broken up from its hurdle zones, and we've seen that there has been a huge price volume surge over here. From the last 2 sessions particularly, we've seen that RSI is also showing positive signs of divergence over here. Overall, the stock is quite nice, and we've seen that few of the stocks in this space is also doing quite well, and there has been a good momentum. Technically speaking, the stock has formed a sort of a bottoming out structure on the weekly basis, which makes it a good risk-reward ratio point to enter at these levels. So definitely the stock is quite positive, and we are looking at the next target of around 785 to 800 odd levels for the stock, with the support of 740 zones. Now, the good part is that it has cooled off from its day's high. So again, it's a good entry point.
All right, that's the day coming in on SBI Card. We're moving on. Let's focus to the pharma space then, because today BofA has come out with a note where they do like some of the counters, and they've also highlighted some of the stocks that are gaining in the US market specifically, because the latest reading with respect to IQVIA July data, that indicates positive traction in the US generic sales. Now, on the rolling 3-month basis, some of the companies like Zydus, Sun Pharma and Cipla, they have seen an uptick in ex-G Revlimid portfolio, while Lupin and Dr. Reddy's sales were muted on a sequential basis. Now, the management commentary in Q1 as well as their read of the IQVIA data continue to suggest that there is no change in the favorable pricing environment, and specifically they have highlighted Gland Pharma. If we see the move on Gland Pharma on an intraday basis, that's more than 4% in today's trading session, where the company is seen to partner. The market share trend data was seen to be encouraging, with gains across the large products. And on the charts, you will see Sun Pharma and Cipla on your screens. But if we can have a look at Gland Pharma as well onto the charts, if our producer can highlight that, then that stock is seen to be gaining in today's trading session, with a gains of more than 4% coming in for Gland Pharma.
All right, Shrishti, since you speak of the Pharma Pack and the kind of winning streak that Pharma Pack has seen, over the last 3 months, in fact, but is there more steam really left? Is there more upward trend? Is it likely to continue? Well, we'll go across to some of the D Street experts and see what they have to say about this.
In terms of a pharma, we believe the formulation companies, the contract manufacturing companies, and looking at the demand from the US side, where services are still a key and even pharma is still a key, we think that will keep on growing. So taking that into account, we believe the pharma space along with hospitals makes overall healthcare a quite a lucrative bet.
Pharma companies are really compounding machines. I mean, they have done extremely well. So I would say that yes, domestic pharma it's like a branded consumer company, and some of these companies have done extremely well. As far as the global facing companies are concerned, it's difficult to call out generic cycles. So my preference is to bet on companies which are growing their specialty business. So that's where the moat is created. That's where the multi-year visibility and fat margins are created. So I would want to bet on, for global markets, companies which are creating these products which will have fat moats and fat margins.
The reason we like Newland is because they had done all the hard work from a long-term perspective to build those capabilities, to build the credibility, to get in the customers, to get in the product. And then it's just a question of those flowing through over a period of time, right? And since we invested, we've seen that pipeline continue to grow. You never have the comfort on a given molecule whether it will succeed or not. But when you have a portfolio of such molecules, then you know that some of these will succeed. And even the ones that don't succeed, the company is taking zero risk on that. You can enjoy sort of decent margins on this business. And as this contract research part of the business has grown over time, the company's fundamentals have improved significantly.
Risk reward tells you that there are various pockets in the market that could do well. NBFCs being one, ITC probably being one of the bigger stories, some of the metal stocks, some of the pharma companies like Dr. Reddy's, Cipla, Sun Pharma. I think this is where our focus area is.
This? All right, moving on then, let's talk about another counter that Shivangi is tracking, and that is Voltas. And Shivangi, one-way up move coming in for this stock as well, touching its all-time high levels, and even today touching that ballpark number of 1800 as well. But Shivangi, where do you see the stock headed? Maybe 2000 is something that you're looking out for, or maybe lesser targets for now?
So, Voltas has been one stock which has consistently moved from the last 4 weeks, and we've seen that there has been a good support-based buying, and multiple supports are intact even at these levels, and we're seeing that good buying interest, good follow-up action is visible. Now, derivatives data is quite positive for this one. We've seen good rollovers from the August series as well, and a good amount of longs being carried over, which is clearly showing in the price momentum as well. So definitely this is one stock on radar, and we are looking at the next target of 1900 immediately, and then positionally 2000. But yeah, 1770 would be an important support to watch out for this one.
All right, moving on from Voltas to another stock that's in focus today, Tech Mahindra. Its city is maintaining a sell on this particular counter, and the target price is 1,260 rupees. I feel that it continues to be very focused on the 15% EBIT margin target in the year in this year, and that they had indicated earlier on. Also, the comps is doing better than last few quarters, but growth is still difficult in the current environment, they feel, and also the BFSI is improving, but it is slow and very, very gradual. Manufacturing is similar to last year. Asia Pacific is doing better than expected, and valuations at 25x FY26 estimate consensus EPS. There's a lot of improvement that is already priced in already, and that's why the city is maintaining their sell on Tech Mahindra. And on the back of that, the counter is trading right now. It's trading. We did see it knock down and trade in the morning session. In fact, it was trading with cuts of almost 0.5% odd, but it has recovered from there, and now it's trading with gains of 0.4%.
All right then, with this moving on, but sticking to the IT space then, because Dinshaw Irani, who is the CEO of Helios Mutual Fund, says that they turned constructive on the IT space after the Q1 results of TCS when they were out. Let's listen in to understand his view on the sector.
We turned constructive on IT after TCS results. Actually, I think TCS was an eye-opener. And frankly, for us, TCS is a bellwether because he's been not calling out, but you've got to read between the lines when TCS is, they never give out any numbers. But if you read between the lines, the fact that they added to their employee strength, and the call was also pretty instead of disdainful, it was very positively structured and stuff. So we took away that hint and we started adding to that. And frankly, I mean, so when we are not too comfortable in markets, normally money goes towards safety, right? In the case of IT, the stocks are available at more than half the PEs of FMCG, and the growth rates are better than the FMCG bunch as such. So it's obvious that this is, for us at least, this is a place we can be very very easily park our money and see some growth coming through. So one can probably see that the growth rates may come back to their mid to high teens as such in this case. And that's why I think this is the time to be in a sector where you're sure of the growth. And frankly, I mean, the valuation is also in sync with what you've seen. You talked about the last 5-year averages. Obviously, the 5-year averages had a COVID period where the valuation just shot through the roof, right? But if you look at the pre-COVID period, they were at 19, 20, and they are at 23, 24 times forward earnings as such.
Well, with this, let's move on. Let's put the spotlight on what Adani Wilmar is doing, because there were some media reports suggesting that Adani Wilmar is looking to acquire 3 FMCG brands in a $1 billion shopping plan. And on to this, the company has come out with a clarification where they do say that company is obviously engaged in food and FMCG business, and they keep evaluating various strategic opportunities in the ordinary course. But at this stage, there's no material information or event that requires a disclosure. So that's the clarification coming in from Adani Wilmar. Obviously, on the back of the news flow, the stock did open in the green, but with this clarification, some momentum is seen to be coming out of the way, and that's Adani Wilmar for you guys. Almost flat, but a little bit of decline. Obviously, 1% cut is what we are seeing on this particular stock.
All right, Shivangi, coming to you. Dixon Tech is what you picked out for us. In fact, just yesterday we saw the stock slip 4%, on sluggish FY25 growth projection. But that's the stock today has seemed to have is seeing buying action yet again. It's trading with gains of over 2.5%, and it has given some stellar gains over the last 6 months. Good 82% growth. Tell us, is there more steam left? Is it right now very expensive? What's your take? What are you seeing on the charts?
Absolutely, Ankita. We've seen that this year itself, the stock has moved, almost 50%. And the stock has given a breakout from the bold flag formation on the weekly basis with good follow-up action. Volumes have added up, and in the August series, we've seen that rollovers were around about 93% on the long side, with 21% price rise in the stock. So of course, there has been a good price performance that we've seen, and this momentum is to continue with the volumes adding up. So definitely from the IT space, this is one stock which is looking quite positive, and we can look at 5,500 immediately as the next target, and then positionally 5,750 as the targets for the stock. 5,200 would be a support to watch out.
All right, then moving on, let's focus to what Aadhar Housing Finance is doing in RIA. The last time I checked, the stock was up more than 7% in trade. Tell us what's the news flow out here.
Finance is in focus today after Kotak Securities initiated a buy on the stock with a target price of rupees 550. Now they are saying that because it is a large diversified player, they have a 20% plus growth trajectory going forward, and the strategy will drive 21% AUM CAGR over FY24 to 27 with low credit costs. They've also said that stable margins and improving leverage will accelerate the ROEs back to the high teens in the near future, and the strong performance drives investors' appetite to absorb large sell-offs from PE funds as well. And as you said, the stock is up more than 7% on the back of these counters today.
All right, moving on then. We'll move on then, Samir. After SpiceJet has issued a QIP to raise 3,000 crores in July, sources say that the senior management is holding a roadshow in Mumbai to garner interest. The CMD Ajay Singh is likely to sell about 10% stake in the cash-strapped airline. My colleague Samir Dixit is joining in with more details on the story.
The cash-strapped SpiceJet airline is desperately looking to raise a fund for the airline and get itself out of the deep trouble. But we are getting to know from our sources that the top management of SpiceJet, led with Ajay Singh, is there in Mumbai for last around 10 to 12 days, having the roadshow, meeting with the multiple investors to raise the fund. Now, if you remember, on July 26th, SpiceJet announced that they are going for a QIP. They are going to raise around rupees 3,000 crore, and larger part of this fund will be utilized to clear off the debt. And for the same, SpiceJet is in Mumbai having the roadshow meeting with the investors. In addition to this, SpiceJet has also appointed ICICI Securities, GM Financials and DAM Capitals for the QIP raising exercise. As per the procedure, after the board meeting last August, then the approval from the shareholders, this process is currently going on. So the shareholders voting will likely to get over by August 14, and then the QIP process will start, and it is likely to happen by around 22nd to 25th of September this year itself. Sources have indicated that SpiceJet is getting good traction from the investors, but there is a big challenge. The recent development indicates that everything is not going well within airline because of the financials. Salaries of the employees, it is unpaid for almost about 2 to 3 months. The cancellation of flights, the problem that is being faced by the passengers. So these are multiple big issues which is actually denting the SpiceJet hopes to raise good quantum. But the top management, Ajay Singh, they are quite confident that this time they will be able to raise fund, and that will help SpiceJet airline to not just improve financials but also the overall operations.
Welcome back to Market Fatafat, and let's keep it going with all the buzzing counters. And Shivangi, coming to you for the next stock, because the stock that you're tracking is ITC, and even in this subdued kind of a trading session, ITC is on the roll along with the FMCG pack. But tell us how you're looking at the charts for ITC.
So we've seen that ITC has witnessed 97% rollover from the August series, with long addition that has happened, 15% open interest addition over here. The stock has come out of its triangle formation on the weekly basis and surpassed its previous hurdle zone of 505 levels. So definitely stock is trading at the higher zones with the bulls in action. Now, the good part is that even on the monthly basis, the stock is holding above its higher band and looking for a good up move from these levels. Now, despite the market being very lackluster, these stocks have been this stock has been doing quite well from the last two sessions. So definitely looking quite positive for the next up move towards 530 and then 550 level.
All right, that's ITC for you. But moving on to another name that's in focus today, that is Uno Minda. In fact, if you see the moves coming in on Uno Minda, there was a sharp downtick of almost 1%, and then there was a sharp recovery from there. And as currently the flat is trading absolutely flat. But the news flow is that they have approved the acquisition of 49% equity stake of Minda Naptesco Automotive Private Limited from Naptesco Automotive Corporation in Japan. And on the back of this acquisition, Uno Minda is in focus today.
Well, that's the news flow coming in on Uno Minda. But moving on, Shivangi, talk to us about Tata Chemicals, because what we have seen is that indeed with all these chemical counters in play, Tata Chemicals has been a bit of an underperformer. But with this move on an intraday basis, tell us, how is your confidence building up when it comes to Tata Chemicals?
So Tata Chem has been one stock which has consolidated from the last 25 weeks, and we are seeing that the stock is now gearing up to come out of this long consolidation. Now, when the stock is coming out of such a long consolidation, it is expected to move, have a good potential upside over here. Now, stock is recently now trading above its 50 daily exponential moving average, and with the chemical stocks in action, the tailwind from the entire sector is also going to add up to this stock. Now, good amount of volumes have been added over here, and we've seen that this stock particularly has seen a good amount of 95% rollover from the previous series as well. So we are looking at 1150 as the next immediate targets for this stock, and then positionally 1220 is what we're looking.
All right, moving on to the big exclusive of the day, GRSE Mazgaon rallying in trade on the back of the anticipated outcome of the DAC meeting that's underway. What's on the agenda and the projects that are likely to receive clearance? Well, let's go across to my colleague Prakash Pedashi to understand what he's picking up from his sources.
Yes, we are learning from our sources that the Defence Acquisition Council is likely to take some big decision today. The meeting is being chaired by the Defence Minister, which is underway, and we are given to understand that the defence projects worth rupees 1.4 lakh crore are likely to be cleared by DSE. If you look at the details of the agenda, sources are informing that DSE may clear acquisition of 26 Rafale maritime strike aircraft that will enhance the capabilities of Indian defence forces. Along with that, the decision likely on construction of 7 new warships with the cost of rupees 70,000 crore, which is part of the agenda. And companies like MGL, GR, are prime contenders for building advanced warships. In addition to that, we are also given to understand that the DSE may approve the Indian Army's project to induct 1,700 new tanks that will replace Russian origin 272 battle tanks with the cost of rupees 50,000 crore. So these are the important agenda for DSE. For its consideration, we are expecting some big decisions today.
Well, thank you, Prakash, for getting us that big exclusive on the defense pack. But with this, moving on to another news flow, wherein day after a massive row broke out over the Netflix series IC814, Netflix India content head Monica Shergill has been summoned by the I&B Ministry to give a clarification. Now, this comes after the 6-episode series came under heavy criticism both from social media users and the BJP for elite false portrayal of characters. Aishwarya Patil joins us with the details.
Well, this particular web series, IC814 Kandahar Hijack, has attracted a lot of ire, not just online, but also it has got the attention of the Information and Broadcast Ministry. And so Netflix India's content chief, along with their legal team, was summoned to their premises this morning. Now, what we're learning from sources is that Netflix has provided assurance to conduct a content review. They've also said in the foreseeable future that content will be sensitive to and in accordance with India's, with the sentiments of Indian consumers and viewers. This is something that's coming in from the word coming in from Netflix. As far as the government side is concerned, what we're learning from sources is that they've said that nobody has the right to play with the sentiments of the people of this nation. Culture and civilization should be respected at all costs, and thought must be given in terms of portrayal of something in a wrong manner. That is something that is taken very, very seriously. And this is the word coming in from the Information and Broadcast Ministry. This row, of course, started over the depiction of hijackers in the series IC814, the Kandahar hijack, which is based on the 1999 hijack of the Indian airline flight. So that's about what really went through between Netflix and the Information and Broadcast Ministry. Just yesterday, in fact, a PIL also has been filed in the Delhi High Court, and the fate of the OTT series will be decided going forward, of course, based on this particular complaint and PIL filed at the Delhi High Court as well.
And while staying with the same issue, let's go across and listen to the former Union Minister Rajiv Chandrasekhar and what he had to say about the issue.
इसमें मैं ज़्यादा रिस्पॉन्ड नहीं करूँगा क्योंकि मैंने आज पढ़ा है कि इंफॉर्मेशन एंड ब्रॉडकास्टिंग मिनिस्ट्री ने उनको समन किया है, लेकिन हम सब जानते हैं कि हाईजैकर्स आईएसआई के पाकिस्तानी थे. इसमें दो कोई किसी के पास किसी में शक नहीं होना चाहिए. दैट इज द ट्रूथ. उन्होंने क्यों किया, क्या किया, वो आईएनबी मिनिस्ट्री जांच करेंगे और वो रिपोर्ट देंगे.
All right, but with this, viewers, it's time to wrap this edition of Market Fatafat. It's a goodbye from me and Ankita and the entire team who put the show together. But before that, we'd like to thank Ria to joining us on the research side, as well as Osho and Shivangi to join us on the technical front. Thank you so much for joining us on this particular edition. But with this, it's a goodbye. Thank you so much for watching, but don't go anywhere. Market action continues on UT Now.